What is good, Tesla family? It's Ray J back with another video, and in this I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what's going on with the overall market and how this may affect Tesla, some very big catalysts coming out for next week, how this may affect the share price moving forward. I'm also going to break down why Tesla ended up doing almost exactly what I predicted, getting a very nice bounce with the markets, and what this means for the markets moving forward. Before I break anything down about all of this price action, though, before I talk about what's going on with Tesla, what you should watch for next week, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks, each worth up to $2,000. And the best part is, any could be a free Tesla share. The offer ends in just 8 days. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was up 5.5% for the day, doing almost exactly what I predicted. I told you guys yesterday that Tesla would likely get a very nice bounce thanks to the market, and this would heavily be dictated by Apple. Now, I know a lot of people did not believe me when I said that because most people did not really expect Apple to pump the way it did. A lot of people thought Apple would come crashing down today. It was the end for the markets. And instead, what I told you was I was pretty confident we would get a short squeeze. I talked about that in the video from yesterday. I said this would help Tesla bounce. SPY is up almost 2%. QQ, the triple Q is up 2%. The NASDAQ is up pretty big. Tesla's up almost 6%. So we got the bounce. We got the squeeze I was talking about. I was correct about that. I want to break down the level on Tesla. So I was talking to you guys about this 166 resistance. I mentioned to you that this is a very, very tough resistance, this 165.5 to 166 area. And Tesla actually broke out. We also got very, very tight just a couple of days ago. So I'm going to hide my drawings just to show you what I'm talking about. We got really, really tight right here. And Tesla was basically just consolidating. I was predicting in many of my videos we'd get like a pump in the morning, then sell off as the day went on. And Tesla followed this trend for many days in a row. And then after it got tighter and tighter and tighter, forming this wedge right here, Tesla got the breakout. And my prediction was the breakout would be to the upside. I thought Tesla would retest 166. I wasn't 100% sure if we could break it. Excuse me, sorry guys. And then I said if we did break it, I'd be watching 170. That's exactly where Tesla went to and closed, 170.06. And why did this happen? That's one of the things you have to remember. Now, for the markets, what's interesting about it is the data that came out today was bearish. The data was bad. Non-farm payrolls are high, 253,000 compared to the forecast of 190,000. Unemployment was 3.4%. We want this to be over 3.6% or higher. The labor force participation rate was as expected, but unemployment is too low. Jobs are too strong. That is not what the Fed wants. Typically, this would cause the market to pull back a bit. The market would not like this, but because of how good earnings were, especially for Apple, Apple helped pump the markets. One thing you have to remember about this earnings cycle, though, is it's very manipulated because the expectations for Apple and many of these companies were dropped. So it looks like Apple is just beating everything they're doing so well, but they did have a decline in sales. Despite that, Apple announced the buyback, which really helped it pump. And we saw Apple start off kind of weak. I mean, it wasn't really weak. It just failed to break out in the beginning. But then slowly but surely, Apple broke out and the market broke out exactly what I predicted. And now what's happening for next week? Yes, the market's pumping. It's awesome. It's amazing. But there's a problem. We're pumping approaching Wednesday. And Wednesday, we have the CPI report coming out. There are many indicators out there suggesting we might get a hot CPI. I know it's called the CPI. It's a very manipulated number, so I don't truly know what it's going to cause. But if it does end up getting hotter than expected, if we see CPI above 5% or 4.9% is the forecast and a 5.6 is the forecast for core CPI, if it's hot, we're going to get a rug pull in the markets and Tesla's going to get rug pulled too if that happens. I don't know for sure. Now, as far as the banks go, we did actually see a lot of banks struggle from the past few weeks. We saw JP Morgan acquire more banks like PacWest and also other ones. This was super important because the FDIC is now getting involved in helping to settle these deals. And then as JP Morgan is acquiring a lot more assets, it's helping to alleviate the pain of the situation. JP Morgan is going to benefit big time from acquiring more and more of these banks, but be assured that we still have to be careful because the banking situation is not out of the water yet. That's exactly what Bullard said today. Now, for inflation, the manufacturing numbers were not good. They were too high. So manufacturing prices were going up, right? That is telling us that we might get a hotter than expected CPI. I don't know for sure, but that's one indication of it. Secondly, we're getting very close to the summer. When we get closer to the summer, we tend to see inflation go up because there's a lot more spending. People start buying more and more things. There's higher demand. And then thirdly, aggregates demand in the economy is not going down. Why? Because the jobs numbers are strong. This means people are still spending money, the pain is not showing, and once again, inflation is at risk of going up again. Gas prices were up about, I believe it says 18 cents per gallon in the USA between March and April was the increase for the entire USA. That's not the best of signs. This could cause inflation to go up because on the last report, core CPI was going up. Remember that? And then normal CPI was just kind of flat. Now we're seeing signs that energy could start going up again, which could cause CPI to go up, and that could be really bad for both the data and also the Fed's perception of this. So you have to be careful. Now, why was I saying the market might pump in my previous video? Why was I pretty confident? I was looking at the bullish divergences on SPY, on the QQQ, the bearish divergence on the VIX, and then I also mentioned to you guys we had almost a million puts expiring. I was pretty confident the market makers would squeeze these shorts. A lot of these shorts started closing their positions. Some even reopened a couple of them and just got destroyed. Max pain came down. The put to call ratio came down. As puts were closed, we saw delta hedging, which meant that we saw more and more individuals and market makers buying those shares. Not the individuals, sorry guys, institutions and market makers buying shares, which caused the market to pump. But now let's talk about the charts and Tesla. What's happening with Tesla? It's losing some momentum right here. It could actually pull back just a little bit, but I do think we're going to try to make an attempt to keep pumping. And then we have to watch some very important resistance levels. Additionally, when it comes to SPY, there's a possible there was possibilities of a bearish divergence developing, but there's not really a whole lot of confirmation. And also, when you look at the extended hours, this is kind of looking like a cup and handle like formation because we did get rejected off where the previous resistance was. That's this almost 414 level. And then on top of that, there's a possible inverse head and shoulders forming, right? This could be a left shoulder, the head. So we might maybe come down, gap down, and just try pushing up a little bit more. And then when I exclude the extended hours, I want to note that there's a gap right here on SPY. We're likely going to fill this gap up to 415 soon. But my best guess or prediction would be we maybe pull back a little bit and then go for the push up. And if we push up this hard right before CPI, be very careful. Be ready for a possible rug pull because SPY has all these gaps below. There are a lot more below. And you have to be very cautious. Now for Tesla, volume on Tesla was 107 million. Average was 126 million. So volume was a little bit below average, but Tesla managed to pump on low volume, which is still a decent sign. Short volume went a little bit up on Tesla to 65%. And then on top of that, we also noticed that there wasn't really much else going on. We tend to be green about 54% of the time on Mondays. But the short interest on Tesla is starting to trend up a little bit more. You can see the bars are like stronger looking and bigger here than they are like back here and even phases like here. And we recently saw about almost 20 million Tesla shares shorted, so a little bit higher than before. I would be careful because this could cause Tesla to pull back a bit, or it could also cause a short squeeze for Tesla. Either one of them are very possible. But now I want to break down what the charts are telling us and a couple of other things for many different stocks. For SPY, there's a possible inverse head and shoulders like formation. We might pull back a little bit, then just keep going to fill the gap. And I'm not really seeing a bullish divergence or bearish one just yet. I mean, there is a possible bearish one right here, but it's not really confirmed just yet. So we just have to be patient on this. I think we have more upside coming, but I'd be very careful approaching CPI on Wednesday. For the QQQ, before I talk about Tesla, let me just talk about the QQQ and the VIX. For the QQQ, I am seeing a potential negative divergence, that could be developing because the RSI is on this downtrend, price is on a slight uptrend. We made a higher high on the triple Q, but the thing is, the divergence is likely developing. So I don't know if it means we're just going to get rug pulled from here or if we're going to push up a little bit more and then see a rug pull later on. But I do see that being very likely. But what I'm thinking is, instead of getting the rug pull, we might just get a small pullback and a push up one more time to complete the divergence. And then as we push up, we might see a pump approaching the very, very big CPI report. And then we could get the rug pull after that. And then on the VIX, I'm noticing that exactly what I predicted, okay? I showed you guys the negative divergence on the VIX. Notice how the RSI is making the lower low, price is making a higher low. And I told you we're likely going to see the VIX get rug pulled. VIX came down 14%. Why? Because the market pumped as I predicted. And then we have this gap down here on the VIX. VIX might bounce a little bit since it is very oversold in a way on the smaller time frames. And when we're down over 10%, there's a high probability of us getting an opposite reaction within 1 or 2 days. So I'm thinking that the VIX might try to bounce a little bit. Maybe the market comes down a bit, cools off its RSI, and then we end up seeing the market bounce and start pushing up again. Tesla might push up too, and then the VIX will come even lower to fill this gap. It could even make a new low, but if it does make the low, it might form a bullish divergence and maybe CPI could change everything. We have to be patient looking at CPI. So far, could you argue that there's an inverse head and shoulders? There's a possibility, but not yet. I would be very patient with this. For Apple, and I'm going to talk about Tesla right after this. For Apple, look at this chart. Let me include the extended hours on this. I told you guys, Apple's probably going to rip. They're probably going to destroy the shorts. People said, you're wrong, it's not going to happen. Apple ripped, almost hit 175. It's up almost 5%. Very, very beautiful stuff. However, it is overbought, and we have to be careful. I'm not really seeing a huge divergence. I think there might be a negative divergence forming. Yes, there could be a negative divergence, but I am seeing weakening momentum on Apple, so I'm expecting a bit of a pullback first. We might pull back during like the pre-market on Monday, trade a little bit sideways and then just get a bounce. I think Apple might trade sideways, maybe trying to push up a little bit more. But then, like I said before, it is quite overextended still. And I do believe it's due for somewhat of a pullback by, I would say, next week by Wednesday or later. Maybe CPI is going to cause that. I do think the odds heavily favor that. But Apple once again helped the market pump. Apple played a big role in causing that. It wasn't just Apple, it was manipulation as well. They were causing a short squeeze, exactly what I had predicted. And that's why a lot of these stocks came up. Also, the 10-year treasury yield is green with the market, so it's very interesting to witness. It's very ironic. It doesn't typically do that. For Tesla, what am I seeing on the charts? Well, we could zoom out and look at the daily first. So Tesla has kind of like an inverse head and shoulders like formation. Is it about to try to pump and fill this gap, trying to make its way on the daily chart to 178? That's a possibility. But the problem is if we don't achieve this before CPI, I'm not going to be as sure about that happening because it will depend on CPI. We're about to get a bullish cross on the PPO on the daily chart, so that's a bullish signal for Tesla. I think without the extended hours, if you look at this on the hourly, so like this, you may already see this crossover like right here. That's part of why I was bullish on Tesla. Tesla is going to be fighting the 1 hour 200 EMA at 173 very soon. Make sure you watch that. Now let me talk about some important levels before I conclude this video and break down what is very likely to happen. We have a bullish break to the upside, but Tesla's going to fight for 170. For us to turn very bullish, we have to break past 172.5 to 173. We have some resistance there. The 1 hour 200 EMA is around 173. If Tesla could break that, it's going to test 174.5, then it's basically going to come very close to filling the gap at 178 on the daily chart, and it could get closer to about 180. If it breaks 174.5, it's very likely to do that. However, The more bearish case would be Tesla rejecting off 170 and retesting 165. Both are very possible. I am thinking Tesla's going to pull back a little bit on Monday, just pull back in a very healthy way to cool off its RSI. The RSI on the 1 hour time frame is at almost 79. It's very, very overbought. It needs to cool off a bit. So completely healthy to see Tesla pull back a little bit, might retest 166 to 168. Then if Tesla holds this and establishes a higher low, it could try to pump even more. And if Tesla does get the pump with the markets, because I am seeing signs that SPY is going to pump more, like I said before. I think the market's going to pull back in the very beginning, then get a nice bounce and start pushing. I think SPY is going to fill the gap to about 415 very soon. After it pulls back just a tiny bit, it's going to bounce by Monday or Tuesday, get a really nice bounce and a push up. And I'm thinking this is going to be correlated with the QQQ and the NASDAQ. It has a tendency of running with SPY. So I'm thinking that Tesla might pull back a little bit, push up, and then retest 170. If it breaks this, we're getting some bullish signals. So if it does get the clean break, we're still waiting for a very, very clean break. I think it most definitely can do this. We might see Tesla make its way all the way up to about 173 at the very least. If it gets to 174.5, look out. It might fill the gap to 178 pretty fast. But don't become too complacent, okay? Don't become too excited over that because we have CPI coming out. It will be fun when it happens or if it happens that fast, but be careful after CPI because it's going to be a major catalyst for the whole market and also for Tesla. Okay, guys, so thank you all for listening. When it comes to my predictions, I've been right the majority of the time, but I'm not always going to be correct. I'm a human, I make mistakes, and also it's impossible to be right 100% of the time when predicting what the market's going to do. But the majority of the time, I have been correct about these calls on Tesla. I was talking about it just trading flat for the last couple of days. And then yesterday, I predicted Tesla would get a pump today, a big one. I told it would retest 166. It could have broken it, and then we'd see about 170. And that is what happened, right? So very awesome to see Tesla do this. The last thing I want to say is I have some merch for you guys if you're interested in buying anything. And also don't forget about the Moomoo link, which is down below and in the description. All right, guys, so have an absolutely spectacular weekend. Tomorrow I'm going to make a video about something Elon Musk said that's very serious about this market. And I think we have to listen to what his warning is. And I want the best for everyone. Tesla to the moon because the long term is still incredibly bright. And peace out.